The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
It's a big deal. It's a huge deal. It will bring stability. It will bring predictability. That's very important for our businesses on both sides of the Atlantic.
I'm going to let you say, but I think it's the biggest deal ever made. Thank you very much.
Deal done. US President Donald Trump and European Commission President Ursula von der Leyen announced a deal that averts a trade war, but will still see the EU hit with tariffs of 15%. European futures move higher in pre-market trade as investors welcome a degree of certainty ahead of Friday's tariff deadline.
And it's glass half full for Heineken despite the trade turmoil as the brewer posts a first half beat and backs its guidance for the year. We'll be hearing from the CEO, Dolf van den Brink, at 7:30 BST.
A one-hour conversation in Scotland bringing about a big breakthrough in trade negotiations between the EU and US. And the two have struck a trade deal that will avert a prolonged trade war between the two sides. With European exports to the US set to be hit with a 15% tariff, less than threatened but nowhere near the 0 for 0 deal the EU had initially hoped for. The duties will cover autos, pharma products and chips, but will not include steel and aluminium, which will stay at 50% for now. The deal will also see Europe buy $750 billion worth of energy products over the next 3 years, invest $600 billion into the US, and buy an unspecified amount of US-made military equipment. EU Commission President Ursula von der Leyen, speaking alongside the US President in Scotland, hailed the deal.
We have a deal. We have a trade deal between the two largest economies in the world. And it's a big deal. It's a huge deal. It will bring stability. It will bring predictability. That's very important for our businesses on both sides of the Atlantic. It's 15% tariffs across the board, all inclusive. The investments Mr. President just described, that going to go to the United States and the purchases over there. Indeed, basically the European market is open. It's 450 million people. So it's a good deal. It's a huge deal. Yeah. It was tough negotiations. I knew it at the beginning, and it was indeed very tough, but we came to good conclusions for both sides. So again, congratulations and many thanks.
President Trump also lauded the agreement.
They're agreeing to open up their countries to trade at zero tariff. So that's a very big factor. Opening up their countries, all of the countries will be opened up to trade with the United States at zero tariff. And they're agreeing to purchase a vast amount of military equipment.
Let's get to Sylvia with more of the detail. Sylvia, good morning to you as well. What struck me was the response from European leaders, not just Ursula von der Leyen there, but to Friedrich Merz over in Germany, to Giorgia Meloni, more of a populist government in Italy. There was almost a sense of relief that the 30% tariff hit had been averted. But if you look at the response from a lot of industry leaders, their response was different. They were not happy with what they're left with in terms of the size of this tariff still.
Because whatever the size was going to be, it was always going to be worse than what the EU had before Trump arrived at the White House. So the deal is complicated for many parts of the European economy. But I would just take a step back and actually look at what happened in Scotland. This was the political moment that we needed to actually see this deal announced. We spoke about this in the show before, that perhaps von der Leyen would have to go all the way to DC to see an announcement. It happened in Scotland. But ultimately, we obtained this political moment where both presidents actually came together. But looking at the detail, and yes, it is still very thin, when it comes to cars, here's an improvement here for the European Union. The tariff is going to go from 27.5%, which is currently in place already, to 15%. Von der Leyen was very candid about it. She said it is the best we could get. In terms of pharmaceuticals, von der Leyen herself said that we're going to get a tariff rate of 15%. President Trump didn't confirm that. But von der Leyen was very clear to say that whatever is the outcome of the investigation stateside, that will be on a different sheet of paper, and it is not going to apply to European pharma. So let's see how this is going to unfold. There's still some uncertainty when it comes to the pharma sector as well. More broadly, though, as we are all trying to understand what is the detail and what is actually happening here, I'll just highlight that there will be a meeting of European ambassadors happening in about 25 minutes' time. That's the moment when the European Commission will be debriefing the member states, and we are likely to get a little bit more detail once that meeting has finished. So I'll keep an eye on that as well. For the time being, it is what you guys have said. The announcement brings relief from the point of view that it brings some certainty. But is this what Europe wanted? No.
When it comes to the critics here of this deal, what do they think the EU got wrong? What could Ursula von der Leyen have done differently in these negotiations?
It is easy to have that sort of conversation now that the agreement is on the table, right? But for the time being, we are looking at a little bit of differences of opinion. Germany was always of the opinion that the Commission should have been quicker in getting a deal similar to the UK, and the advantage there was that the UK did get only 10%. But the others in the European Union actually have said that that the EU should have gone even harsher at the beginning and actually imposed retaliation measures like China was doing. The EU opted for what is their usually more diplomatic approach. Let's have conversations, let's try to find an agreement. And ultimately, they've come to this 15% tariff rate, which von der Leyen highlighted. Guys, this is the best we could achieve.
Just to the number, the 750 billion that we're seeing on the energy side, this is one of the giveaways here, what the EU have volunteered to try and give back to the Americans in terms of purchases. There was a number anyway, 250 billion per year was the number Europe was seeking to replace of Russian energy. So in terms of whether this was a silver platter that was handed over to the Americans, there was something in it for Europe too.
Totally. And this was not new. The EU had already said for many, many times before that they were going to buy more US LNG. This was always going to be part of the agreement. And look at the duration. The compromise is only to do it for 3 years. So for as long as Donald Trump is at the White House. Beyond that, there's no compromise in this trade agreement as well. So let's see what's going to happen. But when it comes to energy, when it comes to what they also said in terms of buy more US military equipment, that's not new.
Sylvia, thank you for breaking down the details for us. In terms of those critiques here, let's turn to France's European Affairs Minister, Benjamin Haddad, who said the deal will bring temporary stability, but says it is unbalanced. Charlotte, talk us through how the French have responded thus far to the announcement.
But that's the only official reaction that we have so far. What we know, and Sylvia was just talking about it, France was certainly on the side of the European countries that wanted a tougher response against the US in the negotiations there. Unlike Germany, for example, we know the two leaders, Merz and Macron, met last week to try to align the position because they have such different views on how to handle the US, obviously Germany being more exposed to exports as well, so they wanted a softer stance. So we are waiting for the official reaction from the government. But Benjamin Haddad, the European Affairs Minister, saying on a post on X this morning, saying it's a temporary stability. It's kind of a bit of an oxymoron there, but certainly that's what we heard from businesses out there. It kind of gives a bit of visibility short term, certainly better than what the other deal of no deal would have been on August 1st. But it is the deal is very much unbalanced, and that's what the minister is saying, that we still need to draw the conclusions of this and address this issue. The question of the anti-coercion instrument from Europe, which is called basically the bazooka, potentially in negotiations for a trade deal. France wanted to use it, and they still want to keep it on the table. They say, keeping, for example, American companies out of public procurement should still be an option because they're still negotiating a lot of the details that we don't have just yet. We know some key industries, so aeronautics at the moment looks to be spared, which is a top export from France, so that is a relief for Airbus, for example. But other areas, we know wine and spirits, which is the third biggest export for France. There's a bit of uncertainty around that as well. We don't know whether that will be impacted or not. Negotiations are still going. What we hear from some leaders, like, look, when you expected a hurricane, having a storm is better. And that's kind of the situation that we're at now. But a lot of people are pointing out that, 15% is tough for a lot of businesses. And if you add on that, of course, coupled with the appreciation of the euro against the dollar, it's a massive double whammy for a lot of European companies.
Yeah, I think you put it really well. We may have averted a hurricane, but there's certainly still a storm. Charlotte, thank you for the detail. Let's turn to markets and see how European equities are reacting to the deal news. We've got green across the board indicated at this early hour. You're looking at a more than 1% jump for the CAC 40, the Zetrodex, and the FTSE MIB over in Italy. UK market is looking to lag behind, but still open higher. In terms of currencies, foreign currencies, let's take a look at dollar crosses this morning. You've got the euro basically flat versus the greenback, sterling slightly weaker versus the dollar, and dollar stronger versus the yen and the Swiss franc as well. U.S. futures, here's the indication for Wall Street. You are looking at the Dow Jones, the Nasdaq, and the S&P 500 all opening higher this morning as U.S. markets react to the deal news and brace for another monster week of earnings.
Let's get to Rebecca Harding, CEO, Centre for Economic Security. Rebecca, we're piecing together this framework agreement between the United States and Europe this morning, the various different sectors that are now facing still tariffs at this stage. That 15% remains by and large. What do you make of what has been cut in Scotland in terms of this deal?
So it avoids a broader escalation, and I think that's really what we have to say about it. We also have to remember that tariffs are still higher than they were on March 31st, so this sort of storm and hurricane analogy is a very good one, and one that's going around Europe at the moment. So tariffs are still historically high. There's still a huge amount of uncertainty out there as well about whether or not this deal will cover certain sectors, whether or not it's going to be a deal that covers more detail as well and avoids the anti-coercion measures. So we're in a position at the moment where uncertainty is the new certainty. We've known that for a long time. This puts some kind of a fig leaf over some of the bigger issues, which are transatlantic relations. And for me, the big thing that we should be looking out for is this unknown amount that's been spent on defence, because obviously the European Union is in a difficult position. It has got this wake-up call on defence that it needs to be spending more money. And what's happened, of course, over the last couple of weeks is that the US has said, yes, they will provide more stuff to Ukraine, but Europe's got to pay for it. So it's wrapping up in this idea of a trade deal, something that's actually a lot more complicated.
You're closely watching military and the spend that takes place there, Rebecca, but you've been watching supply chains for a long time, for many, many years. And the reality here, just because we have two sides playing nice, trying to avoid escalation, what does it mean in terms of the long-term implications on how supply chains could still be reshaped from here?
Well, the EU is trying very hard to develop its own supply chains. It's trying to de-risk its supply chains. It's trying to reduce its dependency on China. It's also, in Germany and in France, a lot of the debate is how do we reduce our dependency on the United States as well. The French are a little bit more belligerent in terms of their language about it. The Germans are a bit more diplomatic. But the material fact is that the EU will be trying to de-risk its supply chains, and we've still got this huge tariff on iron and steel, don't forget. So that's actually pushing the cost of procurement. It's pushing the cost of raw materials up. So it's going to affect all of these sort of base commodities, all of these areas like rare earth metals. There's an awful lot that's not unpicked in this deal, and supply chains and de-risking supply chains is something that the EU needs to do urgently.
When it comes to the EU's political state right now, how vulnerable is Europe? We are seeing a resurgence in right-wing support in key European countries. We're seeing fragile coalition governments return to the fore here. So how would you describe the political scene in Europe, and to what extent that factored into the negotiating stance of Ursula von der Leyen here?
So Europe itself is very fragile at the moment. We've talked about it already this morning. The French want to be a bit more robust about the arrangements with the United States. Italy and Germany are saying, well, actually, this is as good as we could have expected, although the German press this morning is actually being quite feisty about the nature of the deal and the impact that it will have on German exporters. So you've got this huge disagreement between member states that's actually going on within Europe anyway. And then add to that, you've got the resurgence of the right wing that's created instabilities in the German and the French governments. It means that the politicians are having to tread very carefully. So that it's one of the things that's actually weakened the EU's hands in terms of negotiating, because they couldn't get broad consensus across all member states around a more robust approach to the United States. And that has been one of the difficulties. I think it's really interesting that actually it's not the EU's economic heft that is at question here. They could have done more to get a better deal, but because underneath all of this there's actually dissent in Europe and between member states, but also within individual countries, and that's causing a sort of perception of weakness that historically hasn't been there.
It's a really interesting perspective and really stands out in stark contrast to China and what Beijing is able to push for, given they don't have those vulnerabilities and factors to consider. We know the U.S.-China trade talks are due to resume today in Stockholm. What do you think President Trump's objective is with China at this point? Have the goalposts moved since early April when the whole trade war kicked off?
No, this is all about the rare earths. This is all about America still being able to import relatively cheaply the rare earths that it needs for its own security and defence, but also for things like semiconductors and so on. So this is still the United States trying to make sure that it can keep China in line and aligned with a lot of the things that it needs. So that particular set of negotiations is always going to be difficult. And what's interesting is that we've not really heard a huge amount about what's going on. And there are rumours again this morning about, they think they're going to kick the date down the line a little bit, because it's still very difficult, because China has a lot more coercive power in international trade than we give it credit for. It can influence a lot more things. It can shut off supplies of critical minerals, which then disrupt supply chains around the world. So China actually has power beyond the tariffs, which mean that the US is not able to get to some kind of a sort of bilateral agreement in just negotiating terms and this type of I win you lose type way, because there's more at stake.
Rebecca, just a final one, because we've had markets that have been bouncing to fresh records. What investors need to think about from here? Is it a scenario where it's now blue sky, that we've got this big European deal in the bag, Japan, a series of major economies coming to the table to negotiate? Do you think investors should be hopeful from here?
I think investors will be hopeful. And that's very different to whether or not they should be hopeful. I have said for a long time that the world economy and the institutions of the world economy are falling apart, that the World Trade Organization, the IMF, the World Bank, they use the word fragmentation. Underneath everything, we've still got economic fundamentals that are quite good. And markets will be looking at that. They'll be looking at the fact that we've got this sort of temporary certainty. They do still do this taco trade. Trump always chickens out. And it's interesting to see how markets are actually pricing in geopolitical instability all the time. What they're not doing at the moment is thinking about the geoeconomic instability that's there. The extent to which there are signs underlying everything else in the data that China is going its own way. It's investing in Hong Kong massively. For example, you've got separation out of payment systems, but that's all very subtle for markets to start to react to. So for the time being, markets are going to say, great, we've got a temporary deal. We know what's going to happen with the EU, that's stability, and we're likely to see some kind of hubris carry on. But I think over time, markets might suddenly realise that where profitability is going to be in the future is changing. And that's one of the reasons why you're seeing such a surge in Bitcoin.
Sage advice, Rebecca. Hard to see markets responding to the subtleties when it's megaphone diplomacy and megaphone geopolitics taking place. Rebecca Harding with our CEO Centre for Economic Security. And one line I saw, I think it was Politico this morning, say it was ironic that the EU's top brass had to fly to Britain to seal the bloc's biggest deal since Brexit. But that's what Donald Trump wanted.
I had the same thought. Another win for Keir Starmer and the UK positioning itself as this bridge. Also, the fact that the UK was able to secure a 10% tariff deal, and there's the EU sitting there in Scotland announcing a 15% tariff deal.
It certainly looks like a sweet deal, doesn't it? So no one would have described a 10% tariff as a sweet deal previously. Well, President Trump has reportedly frozen restrictions on tech exports to China to keep from hurting trade talks with Beijing and to help secure a meeting with Chinese President Xi Jinping. That's according to the Financial Times, which says the Commerce Department's Bureau of Industry and Security has been told to avoid tough moves on China. US and Chinese trade negotiators will hold their third round of high-level talks this year in Stockholm today as they look to extend a truce on reciprocal tariffs. US Treasury Secretary Scott Bessent and Chinese Vice Premier He Lifeng and their delegations will meet in the Swedish capital amid speculation that President Trump and President Xi could meet later this year.
Coming up on the show, Moet and Chandon's president tells CNBC the demand for champagne is normalizing as it braces for U.S. tariffs. UK Prime Minister Keir Starmer prepares to meet President Trump in Scotland. We'll have more on what to expect, and we'll get a check on the European drink sector with Heineken CEO Dolf van den Brink as the company toasts a first-half beat. Don't miss that conversation at 7:30 London time. Welcome back. Moet and Chandon president Sabine Scherer told CNBC that the company remains agile amid disruption caused by U.S. tariffs. The brand, which recently launched a 10-year deal with Formula One to become the sport's official champagne, says it has seen a normalization in demand. The drinks makers have been, it's been a tough sector for the most part year to date. You've got LVMH, who is very active in the high-end part of this space, Pernod Ricard as well, both lower on the year. Remy Cointreau faring better, almost 7% higher year to date. Charlotte had the immense fortune of speaking to the Moet and Chandon CEO on the sidelines of the Belgian Grand Prix this weekend, and she's back. She's with us now, really interested in what she had to say about what they're seeing in terms of champagne demand, and most importantly, what the outlook looks like, because there's so much uncertainty around this sector given what's happening with tariffs and also the reduced demand for alcohol consumption as a key trend.
And that's the thing, is like the context has been quite tough for them after people kind of popped the core quite a lot after COVID. Things have slowed down quite dramatically since then. What things seemed to be kind of stabilizing, then the uncertainty about tariffs and what the impact could be for them. Because, you know, for these champagne makers, for example, it's not that they can change the production and make some of the champagne in the US to offset tariffs. It has to be from the Champagne region, so there's no way around it. And so it's interesting that when they see this slowdown, this huge investment, this huge sponsorship LVMH with Formula One, a 10-year sponsorship with Formula One, and we know that luxury is pushing into sport more and more. LVMH themselves were a sponsor of the Olympics last year, and we see kind of this connection. So you have to wonder why this is happening, and we know that Formula One is having a massive moment at the moment. And so while Moet et Chandon, which is of course part of LVMH, all imported M in LVMH, they were involved with Formula One between 1966 and 1999. They moved away from it, and they've just this season is the first one where they are again the official champagne. So here again, when I had the chance to catch up with Sabine Scherer, you know, she talked about how going closer to Formula One is allowing them to get closer to new demographics and new clients, especially at the moment when things are a bit tougher. It's allowing them to reach out to new public. So Q2 numbers last week actually from LVMH, champagne is doing a little bit better. So maybe things are on the up now. Cognac still difficult, but champagne better. So when I spoke to Sabine Scherer, I asked her how demand is holding going forward.
I always say there's always a time for champagne and drinking Moet et Chandon. And I have to say that after COVID, we saw a spike in consumption. So everyone went out and celebrated and was happy, you know, that COVID is over. So now we see a little bit more of a normalization, but there's always a time for champagne. It's a product that is not endless, you know. It's a very, you know, small region where we can produce champagne, and there's always a time and a place for Moet et Chandon and champagne.
And we've seen a little bit of a slowdown in demand. There's a bit of uncertainty around tariffs as well. There's some talks at the moment. We could be just about to have a deal, potentially rumor around 15% tariff with the US, but maybe it could be higher if a deal is not reached. What would be the impact on a business like yours?
Well, we stay agile. That's what we do since 280 years. And then we see what it takes and what it will bring to us.
Well, a lot of people say champagne is kind of recession-proof because people will always want to celebrate. People that want to buy a nice bottle of champagne can always add a bit of money to buy that nice
Absolutely.
bottle. How much recession-proof is it actually? How much of the price can you pass on?
Well, I think we're there since 280 years, and we will be there in 280 years. So I think we need to showcase the excellency of our product, because it takes a lot of work to put into a bottle of Moët & Chandon, and I think the consumer will value it, and we need to tell our story, and then I think there will be always a consumer for us.
Again, Moët & Chandon is the largest champagne producer in the world, and we have to wait and see how much tariffs they will have on, how much they have to pass on. But certainly, it will be a relief compared to the 200% threat that we had from President Trump back in March. So they are positioning themselves for potentially hiking prices, pass on a bit of the tariffs. But it is an extra uncertainty on the sector that has had a rough patch over the past few years.